Welcome back, everyone, to the Broker Room Podcast. Today I'm joined by Bill Himmelstein from Chicago, Illinois. Welcome, Bill.
Hi, Michael. Thanks for having me.
Yes, sir. Pleasure to have you here. And just a quick intro for our listeners. Bill is the founder of Tenant Advisory Group and has built a very successful 25-year career in commercial real estate, specifically helping tenants with office and industrial space. What stands out about Bill is how he's intentionally built his business around his life, staying a very present father, husband, and friend while still delivering outstanding results for his clients. Today, we're going to talk about his journey, what's happening in the tenant representation space, current challenges, and how AI is starting to play a more active role in the changing times. So, Bill, having said that, I'll turn it over to you. How did you start out in the real estate world and what led you to where you are today?
Well, thanks, Michael. I like to say I started off in real estate just through a series of mistakes and bad decisions, but really, uh, it was something that started when I was really young, and my father was teaching me about what it meant to own real estate and, learning about leverage, getting a loan from a bank to buy property, um, using the income from the tenants to pay your mortgage, pay your taxes, pay the expenses on the property. And ultimately, you're hopefully left with some money left over where you can reinvest in the next property and then just keep building from there. But I kind of grew and learned more about real estate. I realized that I also thought the brokerage side sounded very interesting and I could use the brokerage opportunity to make some money to then invest in and purchase real estate. And so that's really where once I graduated college, I got into the brokerage side of things and really like a math. It wasn't always straight, growing and improving every year, but I don't regret it. And to have reached the point where we're at now. And I hope things can continue going as well as they are.
Yeah, that's great. Well, thank you for sharing that. And, when we take a look at, where the practice is today, can you talk to us a little bit more about that? What a typical day in the life is like?
Yeah, a day in the life is really about connecting with business owners and C-level executives, listening to them about what I can do to support the growth of their business. Sometimes it involves real estate transactional work, finding a space for their business, buying something, leasing something for them, selling a property, doing a sale leaseback. But a lot of times it's just trying to connect them to other great resources, whether they need a good attorney, a good lending source, a capital source, an insurance broker, a wealth advisor, whatever it might be, or it might be trying to connect them to other potential clients. But really, a big part of my job now, my role, to ensure that my team members have the right tools and processes to execute on behalf of our clients and then to work on behalf of my clients to make sure they're getting the right space at the right price. And also that I can be there as a resource to help support them in growing their business.
Yeah, that's tremendous. You'd want that from any leadership, role really. And, we talk a little bit about now just about a day in the life, what it's typically like. So if we zoom out a little bit more now and take a look at the real estate market as a whole, especially from a tenant's perspective, what are you seeing in the office and industrial space? Have corporate decisions around remote hybrid work, interest rates, economic uncertainty, have any of those changed the way how companies are approaching their real estate needs?
Yeah, when you look at office versus industrial, I look at it as a tale of two cities. Is struggling. I mean, we're recovering from the pandemic, but we're not anywhere close to the vacancy levels pre-pandemic, other than in New York and some of the Sun Belt states. Texas, you've got Houston and Dallas are doing very well. Miami's doing well. Nashville's doing well. And New York. Everywhere else in the country, it's really kind of still in recovery mode. But at the end of the day, we are seeing owners and leaders of companies wanting their people to come back to the office on a more regular basis. What they've seen through not just the federal government, but companies like Amazon, AT&T, JP Morgan Chase, even Zoom, requiring their employees to come back into the office 4 or 5 days a week it's emboldening the small and medium-sized business owners to require the same. I also think that we're seeing the labor market softening up a bit than where it was at the beginning of the pandemic. And so again, the owners and leaders of companies are comfortable requiring their people to come back at least 3 days a week. I mean, I think that 5 days a week is not going to be the norm ever again. Coming back into the office, 3.5, 4 days, it's really starting to pick up. And because of that, we're seeing more and more companies getting back to the office, growing their footprints. And so we are on the path to recovery in most major cities, and that's going to continue. Now, if we flip over to the industrial side, you know, it's within the industrial side, you've got buildings that are greater than 250,000 square feet and less than 250,000 square feet. What we saw the last few years is a huge amount of speculative development for large big box warehouse and industrial space. So 500,000 million square foot spaces, and that those are sitting empty. And that's what's driving up the vacancy rate across the country, pushing it to around 6%. However, Michael, if you look at industrial spaces below 250,000 square feet, in many markets, that vacancy rate is below 3%. It's incredibly tight. So
Wow.
it's when you're looking at small and medium sized businesses in the industrial space, there's very little supply. There's huge demand, which is driving rental rates up, you know, 4 to 8%, depending on which market you're in. And with those rental rates going up, you're also seeing values of those properties going up substantially, unless you're looking at above 250,000 square feet, where you've got a much higher vacancy rate. Are pretty stagnant, uh, a lot of appreciation in value. It's an interesting industrial market. I do believe that we're not in a panic mode by any means. As vacancy rates continue to go up, development slows down and pulls back to a halt. That'll start to level off as more and more of these tenants buy these properties and start to bring the vacancy rate down.
Yeah, from everybody I've spoken to, in the past couple of weeks, they've pretty much echoed the same sentiment, no matter, what type of niche in real estate they're in, respectively. There all seems to be that common co- effect of there just being, too much, or I should say, not enough, properties with the demand, increasing. And so that's just had this windfall effect. And, looking ahead, we're already nearly 5 months into 2026. We talked a little bit about, what's going on right now. If we look out into the next, 6 to 12 months, what do you think the biggest challenge, is going to be? And by extension, how do you think we can potentially address it?
Yeah, I don't know how popular this is going to be, but I see the biggest challenge right now to real estate. This is growing in the leader of our country. The decisions that our president is making to turmoil and certainty are making a lot of business owners pull back and not make decisions about growth. Honestly, that's what I'm hearing from all the business owners I'm talking to, which is many of them on a regular basis, and they're all saying we have no idea what our president is doing. We have no idea what he's trying to accomplish. Hard to make decisions when there's so much uncertainty in the Oval Office and so much disruption going on. So I'm echoing what I'm hearing from others, regardless of what your opinions are, that is the facts, is that because of the decisions and the actions that our president is taking, it is causing businesses to contract, to pull back, to not make growth decisions. Now, that being said, there's obviously a ton of money being invested in AI. And I think that businesses still making those investments, but general, um, you know, professional service firms, manufacturing and industrial firms, it's really hard to predict what's going to happen when you have somebody that's so erratic these decisions. And so that's what I'm seeing. I'm seeing people saying we're going to wait and see. We don't know what's going on. We don't know the effects. Just the fact that the Strait of Hormuz is shut down, it's going to cost. It's already we're seeing the price of oil skyrocket. Oil goes into a ton of other products, not just gasoline into our vehicles. it goes into a lot of other products, and there's many
Oh
other
yeah.
products that are shipped through that strait. Um, and we're going to have difficulties getting those products, which means those products are going to go up in costs, which means we're going to see costs increasing across the board. We're going to see inflation and come back to those post pandemic levels, and it's not going to be good for the growth of businesses and industry. So that's what we're seeing.
Yeah, I mean, no matter what your, politics or your views are, I don't think anybody can disagree that right now we are dealing with quite a bit of uncertainty. Just when you think things are going to start to get back to normal, there's going to be a deal made, it's the total opposite happens. There's just been so much back and forth, especially over the last, 6 to 8 weeks. So I can definitely understand, why a lot of people in the industry have that same sentiment. And then another thing that you mentioned too is, the lack of supply, the increasing demand. I actually read earlier today that housing affordability, correct me if I'm wrong, but I did read this when I was just scrolling through one of my social media feeds. It's hit its all-time high. This is the worst time in history to buy. Have you seen anybody else, echo that sentiment as well? Or did you, see anything related to that?
Yeah, I mean, an expert on the residential market, other than being an investor in multifamily, do know is that costs of materials are at an all-time high, and that's partly because of tariffs being levied on bringing in those materials that we need to build homes. It has increased the cost of those dramatically by putting tariffs on other countries. Like, for example, we get a lot of our lumber from Canada, and just put a 50% tariff on lumber coming in. So now immediately cost of lumber is 50% higher. Labor has gone up. Well, when you're removing a huge chunk of labor, whether they're illegal or legal immigrants to our country, when you're removing that labor, fewer laborers, and so the cost of those laborers is going to go up.
Mhm.
So 100%, the cost of building houses is rising. Now, interest rates, yes, they've gone up from where we were at all-time lows. They're still pretty moderate, but when we look at rising interest rates, that increase the cost of borrowing. So basically, to build a home, it's going to cost you more than it ever has before because of materials and labor, directly based on decisions and actions that our president has taken.
Sure.
Interest rates, which obviously he does not have any impact on, trying to influence what Jerome Powell does and the Federal Reserve, but then it makes it more costly to purchase a home because those interest rates are a little bit higher than they were before. I don't, I can't speak to, you know, affordability being at an all time high. I wouldn't be surprised if that was the case, just because I know that labor and materials are at all time highs and interest rates are higher than they were before. And so that's kind of creating a storm of making it very difficult for first time home buyers to get involved in the market, whether they're buying new or existing. Prices are going to be up and costs of mortgages are going to be higher than they were before.
Yeah, absolutely. Especially with respect to the cost of the materials, like you said. I mean, I was actually considering building a new home, ideally towards the end of the summer, but that is not happening right now unless something drastic changes in the near future. That was the goal, the thought, and then we ended up in a war, and so that's just put things on hold for the time being. But I certainly see
Well,
where you're
it's
coming from in that.
just a war, but it's attacking our trade partners and being levies on them that ultimately the facts show are paid by the American people. And we're seeing it that come into effect. And so I tells me to understand, how he thinks that putting tariffs on other countries is going to level the playing field when in fact, all studies will show you that free trade, which is what we had before, if there's materials being made for a better price somewhere else, and we can bring them into our country for a cheaper rate than making them here, then that
Mhm.
benefits our consumers, which is the vast majority of our economy is driven by the consumer. But making the consumer pay greater prices, higher prices for everything doesn't seem to help the American consumer. It's only hurting us. And this will show you if actually will do research and look into finding facts rather than just listening to what one person or one news outlet is saying, are attacks on the American people. And we are now paying the price. And that's going to slow our consumers in purchasing. It's reducing their purchasing power. So they're going to be buying less. And that's just the facts. That's what's happening. And those goods and services are costing more, which is causing inflation.
Yeah. Yeah, we've seen it, and, it's unfortunate right now. I wish I had a better, none of us have a crystal ball, but I like to think that maybe in the coming weeks, we might finally have a resolution to this, but, we'll see. Only time will tell. And, speaking of the future, one thing I wanted to still talk about that you had mentioned earlier was, AI. And if we look at how AI has impacted the world, since its inception, really, it's been starting to gain some traction now, I think, over the last year or two. And me personally, I look at it as, the way we looked at the cell phone, the way we looked at the internet, another year or two, and it's just going to really, truly blow up. So, my question to you is, how have you seen, well, it's twofold, actually. My question is, how have you seen AI impact your industry so far? And then by extension, how have you seen it impact, your practice personally?
Yeah, I think that wide. I think it's much more of a workflow. Seeing the industry more on a workflow basis. It's helping companies be more efficient. People they do have. Companies seem to be using it for more leads. What I've found in real estate is that when someone's making a decision to hire someone where they're going to be spending a huge amount of money, right? Like in real estate, they want to have a trusted relationship involved. So I think AI is helping my competitors maybe get in front of more opportunities. But at the end of the day, I think it's the trusted relationship is still winning out. Those are improving. So that's what's happening today. I think where it's going to go in the future is that we're going to be able to use AI better process for our clients. We're going to be able to on more work with less people. I believe we'll be able to get in front of more opportunities. But at the end of the day, like I said, I still think it's going to be people hiring people for, their large real estate transactions, whether it's buying a building, selling a building, or helping this company find a space to lease. It's going to just make the industry more efficient as a whole. Real estate since I've been doing this for 25 years, it's been very slow to adopt new technologies. It's a very kind of old school industry, much like medical and banking, the financial industries. But ultimately, at the end of the day, I think AI is going to help the real estate industry become more efficient, deliver a better workflow to our clients. And for some companies, it's going to help them get in front of more opportunities. But it's still going to come down to people hiring people for a very trusted and process in real estate.
Yeah, absolutely. I mean, buying a home, I know you're not too much on the residential side, but buying a home, one of the biggest decisions, you can make in your entire life. And then when you're trying to decide to buy a building for an investment or for a business, it's of the same nature. That's not an easy decision to make. And even though AI is going to help scale and even simplify that process, ultimately, there's going to be nothing that will be able to replace, that human connection. That's what I've noticed. That's what everybody I've spoken to has noticed. The general consensus really seems to be that, yeah, AI's here to stay. It's going to, intersect with the business. But what it's really going to do at the end of the day is not ultimately replace people, but it is definitely going to widen the gap between those who do use it and those who don't use it. So,
That's well put,
yeah.
Michael. Yeah.
Yeah. And that's, again, the trend that we've been seeing here. Bill, as we're, starting to come up time, and thank you again for your take on the AI piece. One question that I always like to ask, yes, as we get towards the tail end here is if there's somebody, starting out in the industry today, any advice, words of wisdom for them on, how to take their career?
It's a very simple piece of advice, and it's two words: givers gain. I've always felt that the more you give, the more you get. And so, number one, I would start by finding a mentor, someone that you can trust, someone that's going to believe in you and give you the time of day and teach you the business and the industry. But number two, it's also about connecting with the right people. And when you do, giver's gain comes into play. And that's about understanding what you can do for them that's going to support their growth and support their goals and understand what they're trying to accomplish and help them get there. And once you've done that, then you have earned the right to ask for that support back. And so I spend an inordinate amount of time supporting others. Oftentimes, it has nothing to do with real estate. It's simply about growing their business, supporting them in meeting their goals, and in front of opportunities to win new clients. And when I've done that, then I can go to them and say, hey, I found several people you're connected to on LinkedIn that would be great for me to meet.
Mhm.
Would you be interested in making an introduction for me? It works almost every time. I mean, not everybody reciprocate. A lot of people out there are takers. You'll learn how to spot that earlier and earlier in a relationship. But most people, especially if you've helped them in one way, shape, or another, they're going to want to help you back. And so it's giver's gain mentality. Try and support others so you can then earn the right for them to support you back.
Absolutely. People helping people is very, very powerful. Even back when I used to be a financial advisor, I helped a guy out who did painting as a side gig. And then one day my buddy needed a painter. I put them together and boom, he had a good case from that. So definitely see where you're coming from in that regard. It's a great way to just not only build yourself up, but help others grow around you too. Excellent system. And Bill,
Absolutely.
again, this has really been fantastic. You've given our listeners a really refreshing and value-driven experience perspective on building a successful commercial real estate practice and how AI can help protect that balance. So for our listeners, where can they go to learn more about you and potentially even work with you?
Absolutely. Thanks, Michael. I appreciate the opportunity. To reach us is to go to our website, which is www.tagcommercialbroker.com, TAG commercialbroker.com. There's a plenty of options to contact us. Those emails for contact us go directly to my inbox and I respond to those. I always say in under 24 hours. It's usually only a few hours maximum, but that's a great way to reach me is going to our website and clicking on the contact us, and we'll back to you in order.
Excellent. And I'll make sure to include that in the dialogue description here for our podcast edit for our listeners. So thank you again for that
Terrific.
information. And yep, Bill, this has been great. We really appreciate you here. Thank you again for coming on. I hope you have a good one.
Me too. Thanks so much. I appreciate it.